So the underlying question is, would you believe it if I told you that the market could rally 11% after going absolutely bonkers for the first half or first 2 quarters of the year? Maybe you would, maybe you wouldn't. And just to remind everyone, we talked about what NVIDIA was going to do most likely after its earnings, right? So we said I wouldn't be surprised with 1100. Smack Debaroo, where we teed out at 1100, roughly 50, and then pulled back ahead of NVIDIA's what they're calling once in a generation investment opportunity ahead of its 10-to-1 stock split. If you guys didn't know, NVIDIA was doing a stock split that we called out prior to its earnings. So, just tooting my own horn there. And looking at this, they're talking about, is it going to be one of these, like, once they split, is it going to continue going up? I'll argue yes, because semis are leading. Like, if we jump over to SOXX, it is the semiconductor ETF, as you can see here, very reminiscent of the tech NASDAQ market, and just pushing higher, and higher as we go. If we go to the monthly view, as we see here, monthly engulfing candle on the close, which was Friday, we closed the month out. So this confirms higher highs and a continuation of this movement higher. So again, keep your eye on that. Chips are going to be one of those hot things that everyone's going to be talking about, especially going into the NVIDIA split. Everyone's going to be trying to get in or taking profits. So it could be a little volatility there, but you guys aren't here for me to ramble about NVIDIA for hours on end. You're here to know what the dang market did, why it did it, and where it's going to go, most likely based on the levels that we can talk about today. So first of all, let's start off with the S&P, and a good morning or evening, ladies and gentlemen, depending on when you are watching this. So looking at the S&P, we called out this level previously, the 524.70 level, 38 level. We said that is also the previous all-time high. It was a weekly low. We do not want to break it. First thing we do this week is just go straight down, right? We go straight down. We have a massive red day on Friday, especially when the PCE numbers came out, right? PCE staying flat. This is basically indication that the Fed is not getting the data they want. We also got GDP the previous day, which was basically, hey, contraction in the economy further than we expected. They did denote that 1.3 was the expectation, then they moved it back up to 1.6, and then we got 1.3. Not really surprising there. That kind of told me that the broader market was like, okay, this is where we think we're going. The Fed even said it in multiple of its press conferences, but no one believes them, that the economy was going to slow. So now we have evidence of that, but the bulls don't care. They've been stepping up to the plate, and the bears, I don't think they exist anymore, honestly. Like, if you're bearish this market, and guys, I have my long bearish theory. I talk about the yield curve ad nauseum. But here's the thing. I look at the charts and I play the charts. And the charts are saying bullishness. If I look at this, right, weekly break down and fail, right? The bears failed to hold it, and then we're continuing higher, strong movement on Friday from the bottom of the candle to the top was approximately 1.8% on the S&P. The NASDAQ, I believe, was 2 to 3% with massive volume, right? So price is confirming volume. That is the weekly close the monthly close of the candle. So it's even more important, right? So OPEX and option makers were like, yeah, we're just going to be flat on the week, right? So if we look at the weekly candle right here, not a lot of price movement that we had from the previous week. We've established a new lower threshold, but essentially the level is going to be the exact same. Well, one caveat to this week, which is going to be when we complete this gap fill on the S&P, which will snap a line to right here, which is going to be 530.27. Once we start crossing that, then, well, we're basically continuing higher up to that 533 all-time high breakout, and then the rally continues. Now, where is that 11% coming from, right? So let's just talk about this broader movement that we've had in the S&P. This could very easily be an A to B pattern on the way up that projects up to 550, but we also have a second A to B pattern possibly here that projects up to 554. So if we're looking here at the S&P and assuming that from this point we're here to 554 roughly, that's roughly 5%. If we get that continuation, get more capitulation, more people FOMOing in, thinking it's going to be the next 2016 to 2020 run. So again, that 5% is just a completion of the pattern as we saw. these patterns tend to go much, much further. And with depressed levels of VIX and basically everything else not really doing so hot, we definitely could be getting that. But the first thing we need to do is get above 530.27 and then continue higher to 533.07 afterwards. So now, if you're one of those people that trades the NASDAQ, right, we can go over to it and give you the same exact spiel that we had here. So for the NASDAQ, we're going to make one modification. The support is no longer going to be where we are there. We're going to actually snap a line of importance to the low rotationary point of this week where we opened the candle on Friday. We really need to get back above it. We don't want to see anything depreciate below 449.38, which was the previous all-time high rotation. Being below 449.34 would signify that we are basically continuing the downward trend and that Friday was just a big OPEX expiry event versus broader movement in the market. And I do talk about how the playing field is even now, and that is indicated by net speculative positions. If we jump over to them real quick right here, as you can see, the S&P, we're basically right at zero. So it's at a zero-sum game for the bulls and the bears. Each team has an equal weighted position in the market. So now it comes down to which one wants it more, which one's going to leverage in, and which one is going to let the market basically come for it, right? The market looks to take the most amount of money from the most amount of people in the shortest amount of time possible, and thus it looks to see which one is over leveraged. So jumping back to the NASDAQ, right, again, 449.34 is going to be the point that we really don't want to cross. 460 break would be new all-time high. And really, if we get above 451.85, then it's definitely going to be one of those. I'm going to keep looking at the 9-day moving average to see if that's the next point of resistance, but really going to be playing bullish there. And also, if we look at the IWM as an indication of bullish sentiment, right, we basically have a consolidation flag type pattern here, which for all those that don't really see it, here's your flagpole, here's your flag, and essentially we're getting ready to break it on Monday. So we need to see continuation of that. Small caps are getting bid up with the expectation that federal rate cuts are coming soon, right? We're going to have two major events this week, which is basically two major Federal Reserve banks of the European Union, I believe the ECB and the UK, are going to be cutting rates this week. That's expectation. So if they cut rates, then the question naturally becomes, when is the US going to cut rates? Now, my personal opinion of that is that the Fed will not cut rates in July. I do believe that it'll be sometime in November, just because they need to see data that is supporting. Again, when CPI came out last and PCE doesn't actually give them a warm, fuzzy feeling, this signifies that inflation is slowing, let's say, but is not where they want it to be. So they need more data. They're going to basically be continuing to say they're data driven. And thus, when we look at what's on deck for the next week. But before we do that, if you guys would not mind, hitting the subscribe button and having bell notifications on, it really helps the channel out. And if you are enjoying the content thus far, throw a like on the video as well. So Monday, again, we got global manufacturing PMI. That'll move the market a bit, right? Manufacturing prices and PMI traditionally move the market. They're coming out at right after 15 minutes market open and 30 minutes of market open. So we'll see how the market reacts to that. I'm going to be looking for that reaction. We also have Atlanta Fed GDP now expecting 2.7, so flat from their previous, but we're got to see what this comes out as a whole. Factory orders and JOLT job openings on Tuesday. So JOLTs, again, beginning of the month, we get JOLTs and the ADP non-farm payrolls along with the non-farm payrolls at the end of the week. So this is going to be one of those weeks that we're going to be talking about jobs. And as we can see here, JOLT job openings expected to essentially be flat from the previous month. ADP, again, some contraction in payrolls, but not too crazy. We're not seeing any of these like large swings that are expected from degradation of the jobs market. And again, the jobs market still showing that it is strong based on these expectations. We also have some ISM non-manufacturing prices and PMI coming out that could stir the market depending on which number they want to really look at. So make sure you guys are aware for Wednesday, we got a double news event. As always, on Thursday, we got the continuous jobless initial jobless claims. I don't foresee that moving much. And last but not least, Friday, we get the average hourly earnings along with non-farm payrolls and government payrolls and average hourly weeks. So does this mean that we're going to get anything really spicy? I don't believe so. Non-farm payroll is expected to come in 100K more than the previous time. So this is just showing that maybe a lackluster jobs report. This wouldn't necessarily give me the boost to say that it's going to go one way or another. But again, no news is good news, right? So the market having this can equally push to new highs, especially if we go over fear and greed index. It's anyone's sums game. So this could go all the way to extreme greed or it can go to extreme fear. Each team has equal weight in what they can push the market. I don't think NVIDIA is going to be the big centerpiece for this week, like I mentioned in the beginning of the week, or video, I should say. And I think the week, it's just going to be determined on which team can push you past the rotationary point. If we basically start off bearish, I think that continues into the middle of the week before we basically get a reversal. Or if we start bullish, do we see continuation with some of these catalyst events? The market looks right now to me that it wants to continue this bullish run. If we look at riskier assets like Bitcoin, right? I did say this is a broadening wedge that we covered on the live stream. And I said that I look at this as bearish. However, you could easily break to the upside and invalidate this pattern. The second Bitcoin closes above 72,000, then I'm basically going to be saying, okay, bullish time and looking at more bullish momentum in the market. If we basically break 66,000, then I'm looking at, okay, rotation all the way down to 52. As simple as that. I try to make it as simple. And then if we just jump over some of the bigger cap stocks, right? Apple looking like it wants to tackle these all-time highs up here at the 197 area. And it's continuing to push higher with momentum. They have their big news event this week. So we're going to see how Apple does, right? They're expected to AI Siri, and that's going to be a 13-year update to Siri in the making. So is it going to cause momentum for the stock to go up? And is it going to have sympathy play from like Microsoft and everything else? As you can see, Microsoft slamming back below the 52-day closes. So that's starting to throw warning signs that, hey, there could be rotation or there could be bearishness in the tech sector. Looking at this, I'm going to say staying away from Microsoft until it gets back above that 416.45 level. If we look at Amazon, right, below the 50. Okay, so now we got two below the 50, one above. That's not necessarily playing the most bullishness out. But then again, this could be simple rotation to the small caps that gets big stocks like this bid back up. If we look at Netflix, a little weakness here, but going strong still. Goog still holding strong uptrend there. Again, we talked about NVIDIA, and last but not least, just let's go over like AVGO and Tesla. The consolidation sideways. So again, this is showing a little bit weakness, but again, I'm still expecting this to be a rotation versus this being full bearishness and selling because the IWM is green. If Russell turns and goes completely red, I would be expecting some of these bigger cap stocks to continue selling. Tesla just going sideways, so we're just waiting for a catalyst event to break to the upside or downside. Again, the 50-day moving average would be the line in the sand for me to get out of Tesla if it broke it again. But that's setting up an interesting risk to reward proposition there. So make sure you guys keep an eye on those. Costco, after its earnings, right, had massive wick down, just basically confirming the move. It had to run up into earnings right here. So most of the profit or generation that can happen is staying there. And last but not least, let's just cover yields before we do the biggest winners and losers. As we can see here, 50, two-year holding around the 50, 5-year, 10, all similar stories, 30-year. Coming back off that 1970 pivot, but still just holding strong, going into the expectation that the Fed is only going to hold rates higher for longer versus necessarily holding rates or doing cuts. So make sure you guys throw in the comment section below what you think is going to happen, and Fatal will give you the biggest winners and losers for this week, and then we'll be back for the discussion.
So the S&P 500 this week was actually beginning to head down by a significant amount, going as low as 5,195 points. However, after PCE came out in line with expectations, and in fact, one number actually below expectation, which is actually a good thing for overall inflation. Again, we're going to talk about this more when we get into the debate part. The fact of the matter is that it skyrocketed afterwards past 5,277 points, ending on Friday alone upwards of 0.8%. Looking at this week's upcoming earnings, we can see that there really isn't much anything here. I think I'm going to start getting everybody's recommendations when it comes to fundamental analysis, especially on the 10-year, because as you guys can see here on Monday, the main one here would mainly be GitLab. That's really it. Aside from that, nothing else. Tuesday, we got CrowdStrike, Hewlett Packard Enterprises, Bath and Body Works, and a bunch of other ones more. On Wednesday, we can see that we got Dollar Tree, Lululemon. That's going to be an interesting one because of the fact that this company has fallen a lot in these past couple days. Ollie's, ChargePoint, and Victoria's Secret. On Thursday, we got Neo, DocuSign, and the one that I actually would like to cover the most, guys, is actually SJM Schmucker. This company has been falling a lot recently, if you guys haven't seen, so I really would like to cover this one, if not on the live stream, then just on the normal video. And on Friday, we got two companies, Graham and what is it, J. Jill? I think that's what that is. Never heard of it before. Nonetheless, though, here are the earnings for June 3rd, 2024, the last month of the quarter. So now looking at the heat map, we can see that this is actually mostly in the green. So taking a look at, of course, the technology sector. The worst performer here, it is none other than the company Dayforce. A few days ago, we saw this thing skyrocket a lot. Or maybe it wasn't. I don't really remember. Nonetheless, though, 18.65% down, and the best performer in the whole entire sector, it's actually the company HP Inc., gaining 11.79%. The communication sector is fairly in the green, guys. There's only a few ones here that actually lost. Worst performer, it is none other than the company Omnicom Group, losing, if you guys could see that, just give me 1 second, losing 1.34%. And overall, the best performer, it is the company Warner Bros. Media, gaining 7.01%. Looking now into the consumer defensives. Worst performer here, really easy to find. It's Hormel Food. Wow, that's a massive drop, losing 10.85%, $30.98, guys. Absolutely, look at that line, just a massive crash down. And the best performer, it's also fairly easy to find as well. It is Target, gaining 8.14%. Into now the healthcare sector. A lot of red here, right? A lot of red here. We can see that, I'm going to get to UNH in just 1 second. But nonetheless, though, the worst performer, it is none other than the company Agilent Technologies, losing 13.38%, but also Moderna, guys, also losing around that 13 mark, 13.09%. And the best performer, by the looks of it, it is none other than the company, it looks like it's DaVita, right? DaVita Inc., gaining 11.24%. Now, to talk about specifically UNH, guys, this thing fell back down to around, what was that, like $480. However, on Friday alone, if we switch this to the 1 day, this thing gained 2.85% just on Friday alone. So it did fall. It did have a massive crash earlier this week. However, it's been rebounding. We're still down on the week though, 4.15%, still under $500. Let me know if you guys are buying this one under 500 bucks. The financials are still going strong. I gotta be honest with you. I thought that we're gonna get a lot more bank failures, but apparently not. The worst performer here, it is the company. Yeah, well, actually, I thought it was going to be this one, Market Access Holdings. It is not. It is the company FactSet Research Systems, losing 7.36%. And the best performer, it's fairly difficult to find, honestly. By the looks of it, it seems to be this one all the way at the bottom. Yep, right here, all the way at the bottom, 4.05%, guys. And it is the company Assurant. Oh, you guys can't even see that. Oh, I don't, yeah, sorry. It's the company Assurant AIZ, gaining 4.05%. I'm so terribly sorry that you guys can't see that one. Okay, now into the consumer cyclicals. We can see here that, wow, the worst performer, it is the company Amazon, losing 2.55%. And the best performer, it is none other than the company, wow, by the looks, wow, that is massive amount of numbers. Guys, it's Best Buy, gaining an astounding 21.82%. But also take a look at this. We got Deckers, 20.92%. Are there any other ones here that did like 20 plus? By the looks of it, it is it doesn't seem to be that way. But yeah, that was the best performer, Best Buy, of all companies. The industrial sector, actually fairly 50-50. The worst performer here, it is the company American Airlines, losing 16.79%. And the best performer in the whole entire sector, it looks to be the company Expeditors International of Washington's Inc., Sure, gaining 3.61%. But I would like to also point out the fact that 3M guys, even though they did cut their dividend, they're above $100 right now, 0.63%. The dividend cut really didn't hurt them. If anything, it actually made them better. The real estate sector is mostly in the green, all except for a few companies. Worst performer is CoStar Group, losing 8.78%, and the best performer seems to be the company Ventas, gaining 6.51%. Realty income, guys, is still under 60, right? Still under 60, $53.06. Are you guys buying it at this point? Again, monthly company, monthly dividend paying company. A lot of people say that they're having some problems, but honestly, I don't really see it. I think that they're going to be just fine if things really do go south. And the utility sector, it is an absolute emerald. We can see here that most of the companies are green. In fact, only 2 of them lost, and those 2 were none other than NRG. You guys really can't see that. I really can't move that any further. Oh, there we go. NRG losing 0.11%, so basically nothing. And also the worst performer, it is the company CEG, losing 1.77%. And the best performer, guys, it is GE Vernova, which we covered this one. You know, this was the General Electric spinoff, gaining 8.8%, as well as NEE, guys, gaining 6.24%. Remember when this one completely crashed, this whole entire sector? There you guys have it. Look at that line. Again, when a companies fall that have great fundamentals, it's a great time to buy, because if you did, you are making a nice capital gain on top of a really good dividend as well. And the oil sector is also fairly in the green. We can see here that the worst performer, it is Valero Energy Corp, losing 3.33%, and the best performer, it is Marathon Oil Corporation. I believe there's something going on with them and another company. I need to see what's happening with that, and we will probably cover that on the live stream. And we can see here that they actually gained, as you guys can't really see it, but they actually gained 12.38%. And lastly, in the basic materials, we can see that most of these are in the green. Worst performer, it is the company Nucor Corp, losing 1.56%, and the best performer seems to be none other than the company, DuPont de Nemours, gaining 4.09%. All in all, though, now the only thing that we're really looking forward to, I believe it is just the CPI, if I'm not mistaken. CPI, and if maybe FOMC. We'll probably talk more about when the next FOMC is, as well as the CPI on the debate portion of this video. So thank you so much for watching. And with that said, take it away, Mike.
So you know the famous thing of like, it matters for about a second, and then it doesn't matter at all?
Yep,
That
and then
was
it matters
PC.
again at the end of the day. And then it matters again at the end of the day, though.
Well, not really. The market basically, again, like I said, this could be also OPEX, right? It was the close of the month, it's option expiry, and I believe, yes, it's quarterly expiry too. So again, OPEX had something to play with it, obviously. Now the question is, we got 2 banks expecting to cut this week. I believe it's the ECB and the Bank of Canada or the UK. I can't remember exactly. But
to cut rates.
Yes, so the expectation is they will cut rates. So then the narrative flips to, when is the Fed going to cut rates? And when that narrative flips, what do you think happens? Do you think that they just continue to this bullish momentum, or do you think that they start looking at PCE data and saying, well, this isn't exactly what the Fed wants?
So this reminds me of initially when they were, I believe when they were just beginning to raise rates, or maybe just right before they started to raise rates, the Bank of England, right? The Bank of England said, we're going to cut rates. And then the market shot up massively because the Bank of England thought, not because the Bank of England thought, but because the Bank of England began to cut rates, they were like, oh, that means the Fed's going to cut rates too. And then they didn't. So the fact of the matter is that this PCE data coming in line doesn't do anything, right? If anything, it cements the fact that inflation is still sticky. That's it.
Yeah,
right?
I would agree, because really it cements stagflation like you've been talking about, because if we look at GDP, right, coming in at 1.3 versus 1.6 expected, actually over a 2% contraction in GDP from the previous quarter, and a 0.3 contraction from the last reading. So again, it comes down to what is the expectation for the economy, right? How is the economy going to evolve? Like, we can keep talking about NVIDIA. Again, their stock split happening this Friday, and everyone's like, oh, NVIDIA is going to prop up. NVIDIA can't prop up the whole entire market. Yes, small caps are getting bid up, but small caps are mainly getting bid up on the hopes of Fed rate cuts. and that we saw a hawk from the Fed earlier this week basically come out and say 2 rate cuts at most is what he's seeing. He's not seeing 3 rate cuts. I personally, and I'm curious to see what you think, based on this data, right? You need subsequently 3 months of continuous data. So that's June, July, August. The earliest you're going to get a rate cut is September, and that would require them to cut September, November, and December. And that's assuming that inflation does exactly what you want in the exact amount of time, with no skip of a beat or anything.
Correct. Well, you already know my opinion about this, right?
Yeah, they're not going to cut anything.
They're not going to cut anything. I think it's all just hogwash, right? It's all just it's all just empty words. But it's more of a combination of the fact that people see the stock market as the economy, and that is very, very incorrect, right?
Yeah.
These numbers right here, what they show is the economy. And I don't care who you are, the economy is not in a good place. Right?
Well,
The stock market, hang on, the stock market may be in a great place because stocks only go up, apparently, right, at this point. Stocks only go up. However, what people really feel when they go to the store, when they put gas in their car, when they just go outside and open up their wallets or credit cards, they do not see Nvidia going to number 3 or close to number 2 by market cap, right? That's not an effect. You get me?
It's not on their minds.
Right, it's not on their mind. Sure, is it good to see the capital gains go up? But those are just unrealized capital gains. Unless you actually sell it, you really don't have that money. And then people at the same time, they're falling into FOMO where they're like, if I sell now, well, what if it continues to go up? Oh, no. So people really don't have that cash in the form of fluidity in order to say that the economy is good. Seeing specifically now that GDP quarter over quarter, at least that was GDP for Q1, if I'm not mistaken, came in at 1.3, guys. Came in at 1.3, and inflation for the month. I really would like to see what the inflation average for the quarter is, like for Q1 as well, and,
2.8.
And compare those two. You get me?
It's 2.8, 2.7. It's been the same reading for each of these subsequently every single report. It's actually like, because I was looking at it previously, if we look at
look at that.
You're essentially 2.8, 2.5, the lowest. So let's just use 2.6 as a nice round number. That's what the quarterly inflation is.
So if the inflation for the quarter, it's what was it again? 2.6.
Let's assume 2.5. Let's give them the benefit of the doubt. It's 2.5.
2.5, and GDP came in at 1.3. That means that we are actually losing productivity.
Oh yeah.
Right? That means that the value, because remember, GDP is gross domestic product. So the value that we're actually bringing in through GDP, right, through making stuff, is less than what it is being taken out. Meaning, imagine if you spend a month, let's say $1,000, right? But you're bringing in $900 in income.
Your net
Guess what's
loss.
going to happen eventually? Right?
Yeah, you're eventually going to go to zero because you're going to run out of money.
Exactly.
We also, one thing
Yeah,
that on the same thought of like gross domestic product and stuff, we got Chicago PMI coming in at essentially the lowest it's come from COVID. We haven't even been this low
what that
from
is, please.
COVID.
Explain what Chicago PMI is.
Business activity. Producer Manufacturing Index. That's what PMI stands for. So think of GDP just for manufacturing specifically. And we saw the Atlanta Fed GDP now contract even more. Previously was 3.5, went to 2.7. So it's like, okay, everywhere you go, if you just ignore the stock market, you just see, okay, further contraction in manufacturing, further contraction this, increase in prices. How is profitability just magically going to be good for these small caps?
Exactly. And that's the main issue that right now, that I personally think right now, the markets are having a hard time. The markets are having a hard time separating the economy with the stock market, right? Because people think, oh, but the stocks are up. And that doesn't mean anything.
Jamie Dimon said it the best. 1972 was an amazing year. The stock market was going up. It was completely crazy returns. And then 1973 rolled around.
You don't even have to go that far. All you have to take a look at is GameStop.
Oh,
Right?
good old GME.
GameStop is not worth. I don't care what anybody says, right? GameStop. What was that peak up there? Like $50 or something?
Let me go to.
I don't care what
It
anybody
wasn't
says.
50. It was $80.
Okay. GameStop is not worth $80 at all. I don't care what anybody says, right? I don't care what anybody says. But the reason why it was brought up to 20 or to $80 was because of what?
A former, is it streamer or trader that started the GME run last time tweeted about it without tweeting anything for the last 3 years.
So let me ask you a question. Does the GME run have anything to do with their overall fundamentals?
No, it's pure
Exactly.
speculation. Now,
Exactly.
I will. Now, my counterpoint.
And the same. Hang on. And the same applies. The same applies to that of the stock market as a whole in relationship to the economy.
Yes. Now,
That's my point.
To just go on a slight tangent about GME, a friend of mine that follows this more extensively than me, they actually had GME actually had a very interesting statement that they made. Talking about how like Berkshire Hathaway was a textile company and Amazon was like a grocery store before they became Amazon, and then
It wasn't. Though. Amazon was more of a book selling company.
or whatever. They were something before they were their big gigantic thing they are now. So
Correct.
GME is looking at becoming a investment institution.
Okay.
Which I'm looking at, I'm like, okay, just completely get away from what you were having means it'd be interesting, right? It'd be interesting to see a company turn around to be an investment institution and then be the graveyard of shorts because this stock is shorted like no tomorrow, which it'd be funny, right? It'd just be funny to see all these shorts get run over by an investment company.
And that's the thing too. Here's the thing. Funny thing you say that because I actually did not know that. If they do become that, I really do hope that they do good, right? Just because a company's changing their business model doesn't necessarily mean that they'll go, under.
Yeah.
It's difficult, right? You'll probably see I don't know in the case of GME.
At this point, right? Like you can't go like you were down at like a cent a share. So again, you had these like massive spikes along the way. I'm looking at it like, okay, you got nothing to lose really. Like yes you do, but you really the risk to reward is either your company is going to get shorted into oblivion because everyone's obsessed with shorting this company, or you're going to make it and then basically win the whole lottery. So you really don't have an option, as I would say. I think you just basically have to go for it and see how it goes.
I would actually argue more along the lines of like, they got nothing to lose. Screw it, right?
Yeah.
Screw it. What's the harm in trying something and doing a complete 180, honestly?
Oh yeah.
Than to just keep going with the status quo and then really not getting out there, right? Because I mean, it's the same thing that happened with Blockbuster. Like I imagine GameStop as the video game version of Blockbuster. Video games are now mainly through online, right? You rarely get physical copies anymore. It's mainly all digital, similar to that of like Blockbuster and Netflix, right?
Oh yeah.
So I do foresee them not surviving, them going the Blockbuster way, unless they do exactly what you're telling me. Redo their business model.
Yeah, and also because of this massive jump, they raised several $1 billion in cash that they're going to basically be sitting on right now. So
Right.
they have the opportunity to restructure it, and in the future, maybe something that people find an interesting evaluation, and it'll be a story that people will tell about the crazy GME to transition, and it'll be like, who knows? It could be the next Berkshire Hathaway. It could be the next 2-0 company. So
Right.
you got a 50-50 shot.
Yeah. And why not take the risk?
Oh, yeah.
Aside from that, is there anything else regarding this upcoming week?
Well, we do have jobs, right? Jobs, but then again, if I
that's
look at the
right.
jobs numbers for this week, ADP expected to shrink about 20,000. And payrolls, they only have the non-farm payrolls expectation, which is the one everyone cares about. They're expecting an increase of 10K jobs. I'm looking at this and I'm just like, unemployment staying flat, jobs staying flat, nothing really here, right? There's no like excitement to be generated off of this, neither for the bull team nor the bear team. But the pendulum is basically equal, right? Net speculative positions are flat right now, so both teams have same exact exposure, and fear and greed is flat.
So, here's my question, right? Are we going to go back? My question is basically this: if we hit above 185, is the market going to go up or down? Because that's always the question, right? There's always the question. It's just like, all right, okay, this cycle, and by cycle I mean either once per month, once per week, because honestly at this point it's like on a weekly basis now. What cycle are we in? Are we in good news is bad news or bad news is good news? I just don't understand. I just don't know anymore.
I would just argue news is good. And at this point, if the numbers come in hot, then strong economy, nothing to worry about. If numbers come in cool, okay, it's calming down, therefore a Fed rate cut. Whichever way, they're going to, again, I go back to, they will find a way to spin the narrative however they need it to.
Right. And I do believe that the following week, not this week, guys, but the following week, it is the CPI.
Yep,
which
Wednesday.
it is on June 12th.
Yep.
Which is a Monday, if I'm not
No,
mistaken. Wednesday. Okay. Yeah, June 12th. That is that's going to be very, very interesting. We obviously don't have any expectations when it comes to that. But you know, last month CPI was 3.4 on non-core, and then core came in at 3.6. We'll see when the world happens, right? Because now this is June. This is now looking at May. So that one's going to be fun as well. And do we have any FOMC meetings this month at all for June?
I do believe we have
I think so.
One.
Yeah, I think so, because I do remember the CME tool showing that. In fact, let me just look that up just to get it to everybody really quickly. I can get it for you right now. Yes, June 12th. June 12th, the exact same day as the exact same day as CPI.
Really?
What? Yep, right there it is. June 12th, 2024. 95.6% of people believe. Yeah, that is insane.
All right.
That is crazy.
We're back in the spicy Fed and CPI meeting year.
Oh, dude, this month is going to be nuts. This month is going to be nuts. Because then the next one, okay, so the next FOMC is in July. We skip August and then we go to September. So we'll see what happens, right? Because these June, July, August is going to be especially June, right? It's going to be such a catalyst event when it comes to specifically CPI, because what's happening at the end of June, Mike?
Oh, we got the presidential debates also.
Well, no, not that. I meant more in regards to the economy and finances.
I don't know.
What's the end of June?
The quarter?
The quarter ends, meaning we're going to see 2 quarters now of CPI. It's going to be very interesting to see what Jerome Powell says on the July 31st. Also, the July one's is on the last day of July. What's going to be very interesting to see what Jerome Powell says on the July 31st FOMC in regards to now 2 quarters, right? 2 quarters, because if what we get for June, which by the way we get it for June and July, if what we get for June is stagnant to that of what it was for the whole quarter, and then also in relationship to that of the first quarter, odds are that, yeah, we're not going to cut at all, right? Because then the next FOMC after July is September. That's it.
And also we got the summary of economic projection in the June meeting.
Ooh, okay. So we're going to see the dot plot, even though it doesn't matter, apparently. We're going to see what
but it'll tell us what they're thinking at that moment, meaning if their thoughts haven't changed since last time, then we basically know they're not going to cut rates in September. Because if they're not telling you at that point that we're going to see like slowing of inflation, then they're basically going to be like, yeah, well, it's still the same. We still need multiple months. And then it pushes out cuts to past September where it really doesn't make an impact on anything.
June is going to be nuts, by the way. June is absolutely going to be nuts. By the way, I'm looking at the CME tool right now, and it's showing that 95.6% believe, so June's essentially locked in, that we're not going to get a rate cut. Yeah. However, if I go to July, let's see, if I go to July really quickly, it's 83.8% believe that we're not going to get a rate cut. 15.7% believe 1 rate cut. However, if I go now to September, this thing switches entirely. It's basically 50-50. So 47% of people believe that we're going to get 1 rate cut in September. 47%. 45.2% believe that we're going to get 0 rate cuts. So it'll be very, very interesting, how specifically the September one moves in correlation to that of June and July. And of course, of all those PCE numbers as well, and CPI numbers as well. It'll be very, very interesting. Aside from that, last thing, in regards to the
broken
heat map,
needle?
the heat map, not the heat map, the
broken
the
needle?
fear and greed. What's that?
The broken needle.
Dude, I love it because we went from greed. We were initially, I think we were around like 48 or 49 a few weeks ago. We went to greed, then we're back here again.
Yep, we're just ping-ponging around.
Yeah. We're literally, some might say, stagnant.
Yep.
Some
If you
might say it's
right?
stagnant.
Fear, greed, fear. It's like
Yep, neutral.
stagflation.
So this will be a really, really interesting month. Again, we're going to have a lot of news overall, not to mention just anything that may or may happen within the month itself. Any black swans, I guess you could say, or like ugly ducklings. I wouldn't say black swans, but like ugly duckling events.
Yeah.
I'm coining that term, by the way.
Okay.
So small events that aren't like big ones, but they're still pretty bad. Anything else that could happen within that could still swing the market one way or another. We'll see what happens. But aside from that, guys, that pretty much does it for this video. Make sure to like, subscribe, comment. Really does help her with the algorithm on YouTube as well as Rumble. Follow us on X, and if you would like the link to our Discord, ask us, and we'll ask us in the comment section, and then we'll send it to you. In regard to the live streams for this week, what days are we going to live stream, Mike? Are we going to go back to the normal Tuesday, Thursday, or
Yeah, pretty much.
not?
Tuesday,
Tuesday, Thursday?
Yeah.
All right.
There's
Sounds
no
good
news.
for me.
There's no real news, right? So
Not really. We may just... There is one company I want to cover on Thursday, but aside from that, there really isn't much of anything. We'll just probably look at basic news and then just take your guys' recommendations in the chats or something like that. But okay, so Tuesday, Thursday, 7 p.m. Eastern Standard Time this week, we'll be live streaming. So if you guys would like to join, it'll be up. All right, it'll be up, and you guys can ask us questions, and and we read all the chats. So thank you so much for watching. Peace out, and we will see you all next time.